I'm excited to present, or really to co-present this quarter's webinar for Grocers Warehouse. There's some pretty exciting updates for you guys, and we'll have some of our co-GPs help present some significant updates. So Jared will go over residential leasing updates. Will go over commercial. I'll cover the budget, and then Sharabish will talk about development. So our newest project we're working on. Get away, Jared.
Oh, sorry about that. Hi, everyone. Along the lines of residential leasing, we're currently looking at a 93% occupancy rate. Currently, we have 13 out of the 14 residential units leased up, and are currently making steps into getting that last unit filled. We have a referral program going on right now where any current in-place tenants can get 1 month free for any successful referral for a tenant that's going to infill the vacant property, as well as running a winter special where we're giving out the current vacant unit for $12.50 per month for their lease. Also, our on-the-ground management team is doing virtual tours given the current COVID climate, with listings on Facebook Marketplace, apartments.com, and most recently on Zillow. We've also expanded advertising on these platforms, basically getting more of a presence. And then also looking ahead, we're going to be focusing on extending the current in-place leases within the current tenants, looking at a few lease expirations within the coming months of March and June.
It's great. So what's the outlook right now on, I mean, it's obviously winter is a tough time for leasing.
Yeah.
So, yeah.
There's a tough time for leasing, and a few things that we're trying to look for in terms of just sort of getting that unit occupied until the busier season. Right now, we're looking at the potential to do some short-term leases for the remaining vacancy, just to get us by this current season and into the busier one.
Mm-hmm. All right. Well, Will, can you kick us off? Can you tell us about commercial leasing updates?
Yeah, so on the commercial side of the house, headline is positive developments and traction amidst a challenging environment. So obviously we still have effects of COVID-19 that are affecting our commercial leasing efforts, but ultimately the team has made some solid improvements and adjustments to make sure that we're best positioned as we look to exit and start the year. So first thing I'd like to highlight is Rising Sun Solar. So they have officially started their new lease on February 1st. So you remember they actually were able to take some of MediaHead's relinquished space. So we're really positive on that. The fact that we have a new tenant that their business is doing really well despite COVID, and we're confident that they will be able to make their lease payments. So we signed them to a 5-year lease. So that's in extension of what MediaHead had leased on that space. And then as a positive development, we expect that MediaHead will actually be able to really start chipping away at their remaining balance now that they have a lower lease payment. So even if they were to continue paying the payment that they've been making every month, now that they have a reduced rent and reduced CAM portion, we expect that their balance will begin decreasing. And so we're still in talks to actually figure out what that payment schedule looks like. But right now, we're pretty confident that both Rising Sun and MediaHead will be able to pay rent on that space. The next big development is
sorry. And so just to reiterate, guys, like one of the big things we knew going in was MediaHead would be a challenge. They were in terms of the business model and COVID impact, and also the lease would have been up in April. So we would have had potentially a pretty big tenant essentially leave us in April. So we could have put Rising Sun in a new office space and essentially didn't have to really help MediaHead out, but this is a twofer. This helps us extend Media Head by a year, and then also reduce our tenant improvement costs on Rising Sun's new lease. Sorry, go ahead.
No, it's okay. Yeah, no, that's a good point and background to have. So moving on to the next big development. So after almost 6 months of leasing exclusively with NGZ, we decided to switch our leasing agent to Opes Commercial. So we felt like even during COVID, the team that we had, marketing the available space, we felt like they weren't bringing in enough leads, and ultimately wanted to switch to another agent who has had a tremendous track record leasing throughout COVID. The team that we switched to, they've leased several of Ang and Tuesday Capital's other commercial properties. So we're really confident that making this switch will be able to bring in more leads. And in terms of their marketing and outreach, they've mentioned going after a much more targeted approach. So going after more gyms and coffee shops, more of a kind of roastery concept that would really fit kind of the space we have available in one of the buildings. So we're really excited to begin working with them. They officially started on January 1st. So we're looking forward to having some additional traction there. The next point is we actually were able to negotiate lower fees for alarm and security systems on our contract renewal. So we were considering switching vendors to a local company compared to Federal, which is a national company. What ended up happening was we were fully set to switch to the local company, but ultimately really just use that as a negotiation tactic to lower our contract costs with Federal, as well as to get them to upgrade our current equipment. So that was a really positive thing. And as I mentioned before, we're currently working out a payment schedule for Media Head to figure out how much of their outstanding balance they'll be able to pay during their year-long extension. And from there, we'd look to either extend them on a new lease, including that balance, or potentially have them leave and find a new tenant. So that's most of the updates on the commercial side of the house.
Thanks, Will. So that gets us to the budget and the numbers. So we're tracking below budget. And there's two major factors here. One is Media Head's just not paying the full expected rents. Second factor is we spent a lot of money on tenant improvements and getting the new tenants in that should start yielding results going forward. So we are pretty optimistic that we can go back to our budgeted cash flow. But we're still dependent on infilling a couple more spots as we go into sort of past the interest-only period past June. So we're pretty optimistic still. And I think Sharavesh is working and the team is working on some potential other income streams that he'll share with you shortly. So Sharavesh, you can take it away.
Sounds good. Thanks, Hang. Hey guys, I'm Sharbesh. I'm a GP on the Grocers Warehouse deal, and I'll be presenting one of the new opportunities we're working on to boost our cash flow and overall property value. And so what this is it's about $1 million of new property, a triplex that we're going to build on the Grocers land itself. So if this picture right here kind of shows what we're going for. It's going to be 2 units at the base level and a penthouse suite on top, basically above the parking lot that we already have on the current site of the property. If you go to the next site, there's basically a couple of reasons why we're pursuing this. So obviously, there's some risk that we do incur by building on top of the Grocers property. But there's basically, we're sure enough that this is going to be positive for our investors that we decided to pursue that risk. And why we did that, the first reason is because we're actually not putting down any additional equity into the property. So basically, since we're using our land value to offset the cost down payment and the cost of construction, we don't need to provide any additional value, and we can have it constructed basically entirely on our financing. So no additional fundraising means no additional cost to investors. The second is minimal disruption. We're working with a new partner on site who can basically construct these units off site without any disruption to the current tenants. So what this means is that the actual units themselves will be constructed off site, they'll be shipped in, and then we have a week or two of actual construction on site to put it in place. This ensures that our current commercial and residential tenants aren't too upset by the new property development. And the third reason is the higher upside potential. Obviously, we want to bring the most value for our investors. So what this does for us is with zero equity down, it increases our potential upside on sale because we're constructing new Class A properties with an expected NOI increase of 75K. So instantly, this brings 180K of value just based on what was existing land value is now turned into usable property. And at sale, it's going to bring in that 75K at a 5 cap of NOI increase. If you want to go to the next slide, eh? So this is where we're actually planning on putting this. Basically, each box exhibits like a different place we could put this unit. And what we are basically settling on is this box outlined in green. So what this means is that we're putting the property alongside the park outside Carnes, basically costing us just a couple parking spots. And this means that the property is now, it has parkside views, which again boosts its land value and attractiveness to different tenants. And it's pretty minor, it's off to the side. It's not in the way of business for Roanoke or Carnes. If you want to go to the next slide. Cool. And just to give you a little bit more idea of what this floor plan actually looks like, we basically have two 700 square foot, 1-bedroom apartments. And on the top, we have a 1,000 square foot penthouse. The good thing about this deal is that one of our construction partners is actually occupying the penthouse on day one. So we're guaranteed that revenue basically on construction completion. One more slide. Cool. And just to discuss briefly, this is what our timeline looks like until we finish the construction. So basically we began due diligence and review in September of last year. We're still finalizing the last details with our partner, but it looks like we can actually begin offsite construction as soon as we have permitting and zoning from the city, which should happen hopefully by the end of this month. By December, we should have these units built offsite. And as I said, they're modular units, so we'll have them shipped onto Grocers Warehouse, and they'll be installed and occupied by April 2022, we project. And then by 2024, we can actualize some of the proceeds from the sale. Cool.
Yeah, one of the great things about developing on your own land that is already cash flowing is this wait time is really the biggest capital sink and time sink of any development project, because we're not necessarily waiting on anything specifically to happen. Like our money isn't sitting there doing nothing. It's, you know, we're still collecting cash flow. We de-risk it for our investors. This is also a very novel concept that, you know, is also being de-risked because the developer is essentially taking the biggest unit and he essentially wants to live there. And because it's modular, if this works out, we could do more in that area. So I think this timing fits in really well with ideally when, you know, obviously in COVID, you know, it's a little bit less of a concern after vaccination has been a bit more prevalent. And I think from a sales bonus perspective, you know, we're looking to really have some great units, that A-class units that could easily sell on its own at a 5 cap. That we're developing at way below market, and we're not necessarily adding any additional capital into it.
Actually, I have a question. Since the construction is going to be done off-site, is there a reason why there's so much time between the initial construction and construction completion?
Yeah, construction completion includes like installing it on the grocer's property. So these obviously take like a couple months to build. They have to be shipped and then installed. So that's the entire process, if that answers the question.
Yeah, I think the thing of like, you know, the building out like these shipping containers, I think that's probably the closest facsimile. And then you gotta ship it from the factory, and then you gotta do site work still, right?
Okay.
We're not just like plopping in like a porta potty, and like putting foundation and some you know, some exterior work as well.
Well, and my other
There's
question is
also
will there be any disruption to the current tenants of either the commercial or the retail? I mean, the residential tenants.
So basically, we have around 2 weeks of disturbances while they're actually installing this on the property.
Oh,
But
okay.
other than that, no, because it
Okay.
basically takes up 2 parking spots in 2 weeks.
Okay.
another
How will
point
this,
to bring up is is with our construction partner. He's actually, you know, shared this conservative timeline. So there's definitely some wiggle room there in case they start to dig into the site work and they find some unexpected surprises. So this is definitely more of a conservative timeline. It could be done sooner.
I believe somebody else had a question.
I'm curious, how will this impact the property taxes, and will that also impact our refinancing later on?
Right. So we will be actualized for those property taxes down the line. In terms of affecting our refinance, it's basically going to be bundled into the property on sale. So we can still refinance separately. The way we're treating this is a land lease to the development unit.
So it's actually separate, is what you're saying?
Right.
So the refinance is not, or is you said it's bundled though, but what you're actually saying is that it's part of as a lease, then the land is still technically owned by the original. I don't know what it's called, but I guess we're not actually selling the land, so to speak, but we're leasing it out to this secondary.
That's right. Yeah, we're leasing it together. So we're leasing it out to this triplex, and that's a separate thing. But when we sell, we're planning on bundling the sale.
Got it.
Yeah, so we get the guarantee of a land lease, you know, and then we also get some of the equity on the exit. Now we're not getting all the equity, of course, because the developer is getting part of that. But that was the most simple way we could formulate it.
So would that actually still impact property taxes?
I think it would probably be it would probably be an impact on car tax because it will be on that lot itself. So not necessarily parceling out and creating a new lot. It just does create more, and it would be and then the lease we're going to create with them. I believe we share that the CAM type expenses on a pro rata basis.
Smart. I am kind of curious, how is this, I guess, and other than the location and where you guys are placing it, how is it different than the original thought of having the pre-built items on the roof?
Yeah, so the pre-built items on the roof was a much more extensive project with more tenant impact. So construction itself would be more costly and more disturbances would happen. This is just a triplex off to the side. So first of all, it's a much smaller development, and then it's much less tenant impact.
Yeah, so that would have been, you know, we had some estimates as high as $12 million, and that would have been our capital at risk. So not only would we lose the cash flow from the existing tenants, as we would have to, you know, move them and even actually pay for them to be moved temporarily or even permanently, it would have been a complete not a project. Here, essentially, we're putting no additional investor capital at risk. This is coming in because the land lease is happening, and we're contributing land as sort of our equity basis, and then the partner is bringing in the rest of the capital.
Cool, makes a lot of sense.
Yeah, so this was, you know, probably our smallest opportunity, because you can see these 5 rectangles here. That was a potential plan with the same partner, but it would definitely been more invasive and disruptive for our current tenants. So our primary goal was to have as little disruption on cash flow and disruption for our investors as possible, but to still explore this novel concept where we could still get additional value at very little risk, very little cost. Cool, guys. Well, that was the whole presentation.
Actually, wait, real quick then, for those additional investors, I mean, is that completely separate then, or we essentially are building more value based on giving the land lease, but then are there folks that are jumping in to invest in this expansion?
There's not. We're not actually supplying any additional capital to this. So it's just the original investors.
So what Alan's asking is, are there new investors in this 3-unit development?
Yeah, that's what I was curious about.
Yeah, so on our end, we're basically not providing any capital, so no. On the other, there is our developer who's going to take a 50-50 stake in this triplex, and he will be contributing some capital. So in that respect, yes, he is investing himself.
Wait, but the other 50%, who is it then?
It's Grocers Warehouse.
Yeah, we're contributing the land to the deal, correct?
Oh, I got it. I guess what I was getting in on is, like, for example, say we had friends that, you know, wanted to also join in on Grocers, then it's like, oh, you can have this annex as well, kind of thing. But I see what you're saying.
Yeah. There's we're not sitting any more investment on this end.
Gotcha.
If it goes well and we build the other 4, then maybe though.
Yeah, I get what you mean.
Who knows?
Okay. Yeah.
Yeah.
Did they approach you with this, or did you find, like, how did this all come up?
The genesis of this was Aaron Schlegel, who used to run a $1 billion development with a Ryan company, much bigger, and he's done $1 billion of development. He's very passionate about this project, and he was actually trying to buy this during the same time, by Grocers Warehouse during the same time we had it under contract.
Mm-hmm.
So he kind of got in first, and he's been pursuing us ever since to really explore this concept. He loves the location. It's right next to a great park, right next to a lot of greenery. And ultimately he just wants to live there and build something that he can live nicely and with his family. That's like, I think, paramount concern for him.
Hey, and this is Abraham. I was also on this development. I just want to add a little bit about this property. I think it's a really unique opportunity, both from our perspective, but also from Aaron's. He was mentioning how, one of the biggest pushing factors for him is his daughter kept pushing him to ask when they would move into this park. And additionally, on top of that, he wants to make sure that his penthouse suite, along with mainly his penthouse, would be almost a gallery for future development. So people would come around to him and say, hey, we saw your modular unit. We love the way it looks and we want to build more. So he's definitely going to put in the materials to make it high quality. And it's something that it's sort of a passion project. And he's talked about doing future deals and future developments with our team as well. So we know he's very much invested in this properties as we are.
Yeah, that sounds super aligned with the design ethos of the rest of Grocers Mart too.
Yeah, definitely. Think about like what Grocers Warehouse was. It was a architecturally developed mixed-use building where I don't think a developer would have built it to this quality and design. So we're getting something similar on this smaller development. And when you invest in other people's passion projects, you kind of get the best out of them. So I'm hoping this yields the same results. Cool, guys.
On the budget slide.
Yeah.
Hey, can you hear me?
Yeah.
Yeah, on the budget slide, I think you showed cash on cash actual of 4%.
Mm-hmm.
But you continue to pay us 9% annualized on the dividends.
Mm-hmm.
So I'm just trying to tie that out. Where is that the right way to think about it? Is there extra money
we had-
that you're pulling from?
We were holding back the first 3 months a little bit. Not necessarily holding back, but we were above budget. Obviously, we want to see where that goes because we knew Mediahead had the biggest issue. As soon as we stabilize our finances, and that's not going to happen for a while. We're, to stabilize our finances, we need to understand: are we going to pay for additional tenant improvements to infill the existing office space, or the open office space, and do we have enough capital reserves? The good thing is that we raised significant amount of money for the capital reserves for this kind of thing. We're dipping just a little bit into that, although a lot of that was also to get in tenant improvements. So we're kind of pulling forward cash flow from the future that we know will happen because we'll have additional revenue from Rising Sun starting this month.
I see. Okay.
Cool. All right. Thanks, everybody. Thanks, Will, Jared, Travis, for helping present this. And thanks for everybody attending. Sorry for a mix-up from yesterday, but appreciate your time. All right.
Awesome. Thank you.
Thanks, everybody.
Good day.